Today, my guest is Holly Williams. Holly is a real estate investor in over $100 million of multifamily properties. She's the founder of keepmore.com, where her mission is to educate and share private investment opportunities with successful, high-earning professionals. And she's also the author of Hidden Investing, What the 1% Know and We Don't. And in just a minute, we're going to speak with her about her book, Hidden Investing. But first, a quick reminder, if you like the show CREPN Radio, please let us know. You can like, you can share, you can subscribe, and as always, leave a comment. We'd love to hear from our listeners. Also, if you'd like to see how attractive our guests are, be sure to check out our YouTube channel, and that's Commercial Real Estate Pro Network. With that, I want to welcome my guest. Holly, welcome to CREPN Radio.
It is so great to be here. Thank you for having me.
I am delighted you accepted, and I'm so looking forward to our talk today. But before we get started, if you could take a minute and share with the listeners a little bit about your background.
So, I grew up in Texas in a middle-class family, right? And, when I went to Texas Tech, guns up. Yeah, and so I majored in advertising, finished school, got a job in Dallas, worked for an ad agency, and I was filling out the 1040 EZ, right? And all of the things that I learned that I was told, and I went to business school and I didn't, we learned about P&E ratios and stock. That's what we learned about, right? And I didn't have a need to deviate from that because I wasn't paying much tax anyway, right? But I didn't know that there was any other way because we were bombarded with gazillions of dollars of advertising from mutual fund companies, and we are told at work to do, all about the 401k and all that, and it's not a bad thing. But I always did everything that you're supposed to do. As I bumbled along in my career, I got fortunate. I got very lucky. I'm very grateful for that. And I ended up moving to New York City. I got a job offer here, and it was only supposed to last a year, but here I am 30 years later, and that's that. And 6 years into it, I met a guy who drugged me over the bridge to Brooklyn, and we have a daughter, and it's a good thing. It's a good thing. But yeah, so I didn't know there was anything else but the stock market. I knew that real estate was a good investment, right? So I read Rich Dad, Poor Dad, but all of that is a lot of work, right? And it sounded really good, but by then I had the expense account. I was at AOL back in the day, and we were going to Super Bowls and all kinds of crazy stuff, and life was good. And it's scary because everybody has this map of the world, and my map of the world was about a job.
Huh?
And it was JOB, and put the most, save, live below your means, and thank God that's exactly what I did. And I married a guy that lives below his means, and we had real estate. We house hacked to this day. We have a 4-family house in Brooklyn, and we just never moved, right? So we have 3 apartments that we rent, and I bought a Manhattan apartment just like you're supposed to, in '92 when I first got to New York, and so and then I learned about real estate, which you do, right? I bought a couple of single family homes, that sort of thing, but never, it's a lot of work to find good real estate deals. It's there's no such thing as passive income. No matter what you do, you've got to make it somehow. You've got, so that's the first thing. I'm going to talk about passive investing, and you can make passive income now, but first you had to work hard and get, make it somehow, right? So, all of that said, cut to, 20 years later, 2011, 2008 happened. I saw a big chunk of my portfolio go down, but, just I do everything that they say, don't sell, right? So I didn't, just hung loose, right? But I had parents who were older, and I watched my parents, and I don't care how safe I had a financial advisor who had me in these mutual funds and all this kind of stuff like you're supposed to do. So did they, because that's where I learned the map of the world, right? And so I watched them die in 2010 and 2011. And what happened was, here's the deal. Here's the big lie. And I don't think that scam, whatever you want to call it. Here's the thing. If I want to have first of all, you're told that your expenses are going to go down in retirement. And I don't believe that for a nanosecond. Second thing is we're told that, we need to have $1 million, $2 million, $3 million to retire. It's about that nest egg to retire. And all the retirement calculators tell us, how long do you expect to be retired? The whole mission, the whole grand plan is to die broke.
Right.
That's what they want us to do. And little things that I didn't know, like that 401k, you put it in there when you're not making any money and not paying any taxes. It grows. You take it out and you're paying full income tax. If you take that money and put it in a mutual fund, at least it's going to be taxed at a capital gains rate. But, so there's all kinds of it became crystal clear to me that it did not add up. You see, because if you've got $1 million for retirement and that thing goes down even 20%, all of a sudden you've got $800,000. If you're retired, you never make that two back. So if you were getting your 10% every year or whatever it is, right, 100 grand a year on $1 million thing, that's the average of the stock market. But the big thing is that at some point in your 20 or 30 year retirement, some point their chances are pretty darn good that it's not going to give you the 10%. And sometimes it's even going to give you less than 10%. All the while you're taking money out because you have to sell the golden goose to get the egg. And I'm 57 years old, and the realization began to hit me that this was just really not right. That my parents had worked, and that you never get that money back. And then the government forces you to take it out, which is a whole other topic, right? So the numbers don't add up. So I came to believe that. So I'll pause there, or I can.
No. I wanted to let it air there for a little bit there, but what's crazy, and I think that you mentioned kind of being a member of the herd. You went to school, you got the education, you got the job, you got the 401k, you started saving like you're supposed to, and you get your statement, and everybody's somewhat vested in that. I remember when the internet first came out, and everybody could watch their stocks and all the day trading, and there was like just this whole. Just this, right? But just this, everybody's aware of the numbers going up. But I think what you spoke of just a little bit, and I'm aware of it now more too, having older parents and retired, and just nobody ever asked, how do you get your money out? Because in my mind, what the model was, you built this thing up and then you lived off the interest. That was it was always this chunk there that stayed, and that you were able to, it would continue to grow. Yeah, exactly. And
pass it on.
The tax consequence was more of an ordinary income kind of thing. But, there's two things that you mentioned there. One is the ups and downs of the market. You still need your money. So if the market goes down and you take your money out, you're down, kind of thing. And like you said, the opportunity to make that back up, not likely, especially in a big crash. And just that whole notion of you have to liquidate to get your money. It's not a matter of there's just not this constantly growing thing. I mean, the only way to, unless you're buying dividend stocks, which I mean are fairly rare. I think that the whole stock.
You gotta have a lot of money to
Right, but
live off
just the whole nature
of
the stock market is it's speculative. The whole game is that you're buying something and you hope that it's low and then it will go up. But to get your gain, you've got to make the sale. And I just, for whatever reason, I didn't calculate in my head, all the while, because my dad was a banker and he always said, no, save your money, and in the day, back in the day, the bank actually paid interest, and there was interest. So there was like this, you could see it go up kind of thing. And theoretically, if you had a big nest egg, you could essentially earn enough off of, quote, interest in an insured account at a bank. Okay. I mean, not exactly the most lucrative account, but I mean, there were, those were kind of the seeds of my childhood and what was instilled in me and what, how to play the game. And, like you were saying, you play by the rules, and then all of a sudden you see how the real game, how the back end of the game works, and a little disillusioned is what I would say.
Right. So that happened, and the second thing that happened was that I got a $65,000 1099. You see, nobody talks about the people that have just done better than their parents and maybe have like, oh, we're the top 10% of income, not the 1%. We don't have access to all the accounts. We don't have access. I don't have a $30 million net worth to be able to get a Goldman Sachs wealth management account. Most people don't even know that option exists, right? These are family offices. Warren Buffett does not log into his Fidelity account and buy stocks like you and me.
Right.
It's not what he does. He'll say, don't sell. Well, because he's living off his real estate income, I found out is what's happening. But what happens is you get this 1099, right? And you can't live on a 401k. I mean, if that's all you have saved, then you're really in trouble, right? But so I had other savings, right? And I would get these 1099s. Congratulations, you've made $5,000 or $10,000 or whatever. And you think, oh, that's so awesome. I made $10,000. What? You didn't. And you're paying capital. You give them to your accountant. And he's not even an accountant. He's a tax preparer, right? There's no planning, right? There's a big difference. And you get this thing and you're paying capital gains on that. Cut to, I live in New York City. I start doing okay, and I start getting a really decent salary, and I'm paying 50% of everything I make in taxes. And I know a gazillion people that are doing the same thing, and you complain about it, and it's like, you're so lucky, you make this good money. And I'm not saying that I'm not lucky, and I'm not saying that I'm not fortunate, and I'm not saying I'm blessed with good health and all this stuff. But you know what? They're not, the government, they're not good stewards of my money. If somebody said, well, it's immoral if you avoid taxes. No, it's not. You see, here's the thing. The tax code is written for us to incentivize us to do things, to start businesses, and one of those things is investing in real estate. So if I came into $1 million tomorrow, and I'll ask everybody this question, if you came into $1 million tomorrow and your goal was to help humanity and really be a good citizen and help people that are less fortunate than you, and all, would you give that money to Washington, or would you go fix the road yourself, or help the orphanage yourself, or whatever?
Yeah. No, I think your topic sentence there. Washington's not a good steward with the money. I couldn't. Yeah, I concur.
They're not.
Right.
And neither is New York City. I went three sublist, we're not helping anything. So I got this $65,000 1099. Congratulations, you've made $65,000, and oh, by the way, you owe 30 in capital gains. You owe 30 in taxes, or $25,000 in taxes. So I was like, there are maybe children watching, so I won't tell you exactly what I said, but I'm like, are you kidding me? I have no money. I took no money out. So that's the second thing that happened. The third thing that happened was I'm on the board of the Texas Tech School of Advertising and Advisory Board, or whatever it is, right? And there was a guy there. I'm one of the few people that live in New York, and so there's another guy that lived in New York. His name was Joe Fairless. And so he's younger than me, and we became friends, and he was in advertising, and we both were interested in real estate, but he was a real go-getter. And long and the short of it is that he called me one day, and he said that he was going to hire the guy that wrote Commercial Real Estate Investing for Dummies or whatever, and get him to teach him how to buy apartment complexes. I was like, okay. So he found one a couple months later, and he was looking for investors, and honestly, I just invested in it to help him out. So there's this thing called an accredited investor. I was one. I had no idea what that even was. I had invested in a couple of my friends' startups and everything, and I remember filling out the little thing like, do you make X amount of money? But I didn't know what that was, and I didn't know that I had access to all this other private stuff. There is an entire world that the 1% lives in, and they have access to private real estate investment trusts, and they have access to hedge funds, and they have access to oil and gas investment. And you would think that it would be a lot riskier, but it's actually the opposite. But we are programmed to think if it doesn't say Fidelity, it must be a scam, because that's what we hear. We hear about the Bernie Madoffs of the world, and that's all we hear about.
No, it's funny you mentioned that, and as I've kind of processed and thought more about that, it's recognizing how close are you to the source of the investment. I mean, if you're buying through the Fidelity or whoever, how many middlemen are there? You've got the retail broker that is selling to you. You've got the parent company that made the negotiation with the fund. You've got the fund. There's a long distance between you and the actual fund. So if you are averaging your 8 or 10%, through the market, what's upstream making, right?
Oh man, you don't even know. And so I began to get a glimpse of that when my daughter, we live in New York City, and it was moved to the suburbs or send her to private school. So we're in this private school. Ask me in 10 years if we're doing the right thing. But it's ridiculous because we kid around that we're the diversity, like we're not investment bankers or whatever. And so it's, anyway, long and the short of it is it's actually very diverse, and it's a good school. But anyway, nonetheless, there are some very wealthy people there. And I thought that Wall Street people were making a couple $1 million a year. I thought, this is not, are you kidding me? These guys are making $20 million a year. It's just insane. They live in a whole different planet. And a good majority of them know what I've come to realize now. They're not investing in their own stuff that these financial advisors, first of all, a lot of them aren't any wealthier than I am. So why are we listening to them, right, to tell us what we're supposed to do with our money? Because they don't know. So it occurred to me that most of my net worth, everything that I had worked for, was in something that I fundamentally didn't understand. You see, you go to business school, you think you understand it. But it really occurred to me that I've made a lot of money with Apple stock. I have an iPhone. It works. It's good. It's, whatever. Steve Jobs was amazing. But I know nothing about what this China agreement is doing to their business. I know nothing about their market share in 47 countries. I know nothing about what the competition looks like and I've heard about 5G. I have no idea what it is, except for it's going to give us fast internet and change the world. So where is Apple and all that? So I don't know their business. And guess what? These stockbrokers
Right.
don't know it either. And they're telling us to hang in there, and they're long term, blah, 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 but they're trading in nanoseconds. So why aren't they doing the same thing that they're telling me to do? So all of this became an awakening to me. So I invested in this apartment complex, and then I started to see this money coming into my account every month. And I'm like, because I had taken this out of the stock market, and it's really ironic because my financial advisor, I still have money in the stock market, is coming to see me here in a little while. He doesn't even like it when I call, because every time he tries to call me, I want to take more money out. Like, we're down to like very little at this point. But he told me, you're making a big mistake.
Right. The unknown.
No.
You're jumping off the pier into the unknown, huh?
Well, yeah, and this is so risky. But you see, what people don't know is that so when you make a private investment, you fill out paperwork called a PPM, a private placement memorandum. And what I've discovered, this whole world of multifamily apartment complexes, is that you can buy real estate without having to fool with the plumbers. And there's equity investing and there's debt investing. And most of the public REITs, most of it, not all of it, but most of it that you're buying online is all debt investing. You know, you may own equity in the company or whatever, but most of there's this company, National Real Estate, that advertises on XM. Well, it's debt. You loan them money. They guarantee, run fast for the hills when anybody. They guarantee you 12%, but you don't share on the upside. And the 12% is backed by these hedge funds, and it's a single-purpose LLC that owns it, and so it's all dandy unless it all goes to hell in a handbasket, and then it's worth the paper it's printed on. But anyway. But your debt, you're basically loaning money to them to rehab something, and then they pay you and they get all the upside. So what I've learned is, if you read Rich Dad Poor Dad, there's all kinds of, and Tom Wheelwright wrote a book called Tax-Free Wealth, which is an amazing read. And so this is nothing I came up with. You see, I've learned now this is what the wealthy have been doing all along. The problem is access. See, so what we're doing, when you don't have to have the Manhattan office building, I'm in a Regis that I have it 5 days a month. When I reserve it, and I pay a virtual office, whatever. I'm not, in One World Trade Center or whatever. You start paying those big salaries, and you start paying the office buildings, and you start seeing the kind of money that's being made on the upstream. And if you bypass all of that, which is what we're doing, it's a bunch of people that, like myself, that get together and we buy an apartment complex. I mean, that's really in essence what we do, and we buy them that are already. You can buy them already cash flowing. I didn't know that. You can buy them, 400 unit apartment complex. If you lose a tenant, it's not a big deal. If you have a house, it's a big deal. So, you can go in with 30% equity and longer term loans that you don't have to get out of. There are all kinds of ways to minimize risk. So it occurred to me too that I don't know how to minimize risk in the stock market, except for they'll tell you to diversify, buy bonds and all this stuff, but it's all in their little world, and everything that you buy, they're getting a fee for. I'm not opposed to making money, but I want to share in the upside, and I want everyone else to share in the upside. So what happened to me was that the next thing, I got a call from Joe a couple of months later. I was starting to see this money coming in my account, and he said, listen, I found this apartment, and I found this guy, and he knows he's done 20 of these things, and he knows done it with his partner, and I want to buy this. I need to raise $1 million. Can you help me find $1 million to get into this? It's a great deal. So I went down to Houston, looked at this thing, and I said, sure, how hard could that be? I call my one of my old bosses, right? He sold his last company for $350 million. I mean, these are people that my network
Right.
is a square root of theirs. He's like, Holly, if you want to start, like, I was in market research and advertising. You want to start, like, a market research company or something, and I'll invest in it. You want a job? What do you want to do? It's just like, but I lost money in a land deal too, a couple of years ago. And it's like, so there are many ways to invest in real estate, but there are also some really, what I consider to be, pedestrian, safe, that pay income while you get the depreciation and all of the tax benefits that you get with real estate. So, I ended up putting a lot of money into that deal so that we could do it.
Did your boss? Did your boss?
And I just have to tell you,
No?
no, he's called now. He invested in a couple of them now. He's like, okay, so what are you doing again? This is like 7 years later. So what happened was, I will tell you this, we just sold that thing. I'll tell you the numbers. These are actual numbers. I mean, I don't know, nothing, your mileage may vary, but, for a $100,000 investment in year 2, well, first of all, we make $8,000 in cash flow. So I had more than that. I was making like 35 grand a year in cash flow, what I put in there. And tax deferred, because you get a K1 at the end of the year that shows a loss. So I was basically deferring taxes. You're kicking it down the road, but you're not paying today.
Right. And before you run there,
good.
I just want to make sure that everybody understands the deferral is because of the depreciation. Is that and interest?
Correct. The depreciation and all the costs of running it that the government lets you write
But
off with real estate. It's the same
But
thing as if you bought a house.
like a personal, you say operating a property in a personal home. I mean, if you got to call a plumber, you're not going to get to write that off. But the two that I think people are most familiar
Correct.
with, right?
That's
The
the
two that I think
investment
most people with a home would be familiar with is interest and taxes. Although the taxes have been muted based on the 17 tax plan, but we digress. But anyway, so your K1, it reflects the amount of income that you receive, but then less all the depreciation and interest. So the net that you're taxed on is substantially lower than what the amount you received.
Correct. Substantially lower. And so what happened was I made this money, and then I had a loss at the end of the year. And then, oh, by the way, those 3 apartments we rent out in Brooklyn, we were paying taxes on those, but the losses of the passive multifamily investment I made in Houston were offset that income. And so all of a sudden I was like, okay, this can't be legal. And so, but it is legal. As a matter of fact, the government incentivizes us to do it.
Yeah.
I didn't make it up. So, and 1% know this. We focus on income. My parents died. My father died with like 60 grand left. Seriously, it was scary. And they talk about income. It's wealth building. Now, then they talk about a wealth tax. Well, that's never going to work either for various reasons that I can talk about all day, but I won't. But just read. It's your world, and you're smart people, and they're, don't take my word for it. This is, that's just it. That's just it. I discovered this entire world that it's hidden. I mean, if you listen closely, Warren Buffett talks about how how his secretary pays higher taxes than him, and how that's really not fair. Steve Forbes ran for president, many years ago, and talked about a flat tax. He said he doesn't pay enough. You hear it; they tell you. Nobody's trying to pull one over. Donald Trump talks about it. Talked about it during the debates. As a matter of fact, in his tax plan, he tried to get rid of it. People don't know that either. It's called carry forward interest. Tried to get rid of it, and Congress wouldn't get rid of it because they're in these things too. You see, and that's the whole big thing, right? And so, it's legal, totally legal and incentivized to do it. So we're programmed to act a certain way, but there's a whole other world in there that, if for those of us who have been so fortunate, we're really, what I've found is we're like the only people paying taxes. I mean, it's just like, oh my God. And it's going poof, and it's unfortunate, but it really is. It's going poof, and we were barely. It's tough. It's tough we're getting taxed out the wazoo. So that's what Keep More is all about. So I started talking about this. I couldn't shut up about it. I kept telling my friends, and so they were like, how can I? So one thing led to another, and I immersed myself into this world, because my goal is to not let anything happen you have to know people, right? That's the other thing. You can't just advertise these things. You have to have access to them, right? So I have to know you. I have to have a personal relationship with you. I have a personal relationship with. That's why I like to have personal relationships with lots of people. And it's because I want to keep doing these, and we can't do it. You can't do it by yourself. It's a really and that's what we're doing. We're bypassing Wall Street and going directly to the source, buying an apartment complex, and we all share in the benefits.
No, I love that. I started investing years ago. It was more a matter of I just had real estate clients, and the sad thing is, at the time all I wanted was a new car. And I just say that the car payment, I remember Sunday I'd get the Sunday Oregonian, there'd be car ads all over, and I just thought, I got that new car, just if I could just scrape together this extra money for a car payment, that would be great, And I remember I had a client tell me, he goes, yeah, he says, make $100 a month off that one, $100 a month off that one, $100 a month off that one. I go, that's it. I need three rentals, chop, but the mindset was about how I could spend the money, not how to build the equity. The equity was like a secondary thing. I was looking for the income. And I think kind of what you mentioned earlier that I think is just so worth kind of reiterating is we're trained to go out and get the job because we need the income so we can afford the life and save for our future. But that there's a mind shift though when you start to think about how to build, generational wealth. That's a complete mind shift, because like you said, your father died and there was $60,000 left. Fortunately, it wasn't zero, but that's maybe 1 year's worth of runway. Yeah, no, but I would say there's not much runway left in that. Yeah.
Heartbreak. It's heartbreaking. And what's happened, I'll just tell you the more economics of that first deal. We refinanced in year 2. I got 40% of the principal back. And so that's a return of capital, so that's not taxed. Then I still had my share of the apartment complex, kept making income, and when we sold it, I basically doubled my investment. It's just, and then we did a 1030, what's called a 1031 exchange, and did another thing. And so the difference is that on $1 million example of the stock market, right? I may make 80, 90, 100 grand from that a year in distributions, but I'm not paying taxes, or at least not right then, and I can keep deferring and keep deferring and keep deferring if you do it right. And then at the end of the day, I've still got the $1 million. The equity is growing, and that's the difference between buying for cash flow and buying for appreciation. And that's the other thing. People in New York don't understand that, because you buy for appreciation and you don't buy for cash flow. And the other thing, the government tells us to buy the biggest house you can afford. And when you make a mistake, when you're doing, so people say, don't you wish you'd known this or whatever? And I said, well, our house is worth a lot of money, and so it's better than losing it, right? But at the end of the day, for investment property, the government lets you take off all these write-offs for it. But you can't do that with your primary home, and they keep limiting that. And they don't ever want, the banks don't ever, they make money every time you refinance, and they don't want you to pay it off. All these finance people want you broke.
I remember, again, my thought process early on was just if I could get if the tenant would pay off the property, I'd have that equity. It'd be like a second 401k. That was my thinking, is it'd be a second 401k kind of thing. Because none of my stuff cash flowed in the beginning. I was, feeding it all kind of stuff. But
it's hard to make a single family home cash flow.
Yeah.
Not impossible, but it's hard.
No, the multifamily, I think just the eye opener for me, and clearly you've stated the case, is just buying a cash flowing asset. I mean, it's an actual business that's generating income from day one. It's not a maybe it will, it might, we hope it will, kind of thing. The numbers are there, and then the other thing is too, is especially when you deal with banks and the bigger the loan and the bigger the property and all that, there's a lot more people looking at that make sure that all the numbers add up, because they're not going to lend the money if it doesn't. And when you look at the primary needs, food and shelter are right there. Shelter is definitely a primary need. So, buying multifamily housing is always going to be in vogue.
And then we get to make it better. Okay, so if you think about it, there's a lot of new building luxury stuff. It's Class A stuff, they call it. Class B apartments are in decent neighborhoods that I would walk around in, right? They're decent apartments, but they're not that great. But who lives there are like the LVN at the hospital and the McDonald's manager and people who want their kids in a decent school system but can't afford a house. And they're not building any more of those. Right. And in 2008, when the market crashed, people lost their homes and they had to downsize. And guess where they went? They went Class B apartments. So, we focus, it's very pedestrian and I know a lot of Wall Street people that they like to invest in 10 startups and one of them hits and 9 of them lose money and they want to get on the board and they want to do all this. But, my friends are calling me now going, okay, pedestrian is starting to sound good the older I'm getting.
Give me some of that pedestrian.
Yeah, what are you doing? So I started investing in these things. I lived off my advertising job. I started telling people, and I got lots of great satisfaction off of, we can make improvements to apartments that the hedge fund up in New York with a spreadsheet doesn't even know about. Like there's a waiting list for washers and dryers. I mean, stuff like that. So we go in and we can build a carport, and they'll pay $100 more all day long to get a carport. They're like, oh my God, a covered parking space. And it's not, it makes life better for everybody. And we just raised the net operating income and added $1 million worth of value to the asset. Because if you've got 400 apartments and half of them take the car, this is how the math works. And it's an incredible business. And if you work with people that you know and trust, then every CPA. If you talk to any accountant, they will tell you, you know what, these deals are good. These types of investments are really good. If you know the people and the numbers work, do it. Every single financial advisor I know, I'm talking the Merrill Lynch's, even the ones that are fiduciary and have my best interests, and it's always your friend and everything else. And I know that. I know it's hard to take money from your friend, but they will all tell you, oh, it's risky. But in reality, if you go to these large garden style apartments that are all over America, and you ask the people that work there who owns them, most of them will say it's the management company. They'll give you the name of the management company, but who owns them are like A-Rod and Roger Staubach. He's involved in this stuff, and all the private investments that the 1% has access to that we don't. So half of them are owned by institutions, 25% more, another 25% are owned by like family offices and stuff like that, really wealthy people. And then about 25% are entrepreneurs like me
Wow.
and you. And so, that's what we're doing. And it's changed my life. And since then, I've learned about all kinds of other things. So that's what hidden investing is about. Hidden investing, the first, I'm going to write two of them. First one is coming out at probably the end of February. And it's about me, and it's about, specifically real estate. The second volume, I'm interviewing people with all kinds of other hidden investments, and so I'm gonna have a chapter devoted to oil and gas. I'll have a chapter devoted to this infinite banking that we talked about, Delaware statutory trust, all those things, and so that's what I want to do.
That's awesome.
After this one.
I think that there's a couple of thoughts that come to mind. Is one, the experience you had with Joe in that I mean, it was almost, it sounded like it was a sympathy investment, saying, all right, Joe, I like you, kind of a thing. But it was that when you started seeing the evidence, I mean, it's like, wait a minute, this is adding up, and it continued to speak or confirm that it was adding up, as opposed to, like you said, that $65,000 K-1 or 1099 you'd received and found out you owed all the tax on that. And as you had this good experience, you started sharing it with everybody, and everybody's going like, yeah. But you continue and you continue and you continue. And
now I have a lot of investors so what I do is I have friends, including Joe, and now his deals fill up in 5 minutes, but and he's good enough to let me participate in some of them. And so what I do is I work with people I know. I go and I secret shop, and I help with the marketing, and I work with 3 or 4 investment groups, and so I'm able to get deal flow. And I invest, and so when my income hits 6 figures of not doing anything, I'm like, okay, this is crazy. And but the day I quit my job, I was still scared.
So how long has it been since you've gone full time investing? Wow.
18 months.
And up to.
But I was investing in this. I was learning about this for like 6-7 years.
Like you said, though, it's just, even as you got there was some trepidation about actually cutting the cord and letting go, huh?
Well, I was amazed. See, I'm amazed. I was talking to the chief revenue officer of a major startup, not even a startup, a major successful company in Silicon Valley that everyone would know about. He contacted me. He's like, I'm looking at all these single family homes. I travel while I'm on these trips that the company's paying for. I'm going to go look at houses. I'm like, yeah, right, try that. And I thought so too at one point. And he's like, I started talking to him, and he's like, this is impossible. It's a scam. There's no way. And that's just it. People, even my husband, I mean, I'm married, he's like, we went to 3 CPAs. Like, okay, are we going to jail? No, I'm on a podcast talking about it. I mean, it's like, no, we're not. We're not going to jail, because we're following the law to the T, I might add.
Well,
so
no, and just
it's crazy.
The aha, however you get there, but just to recognize that the path that you've been following may not end up where you thought it was going to take you, and just I think as people get closer to it, and the aha, because I think when you're in the thick of it, when you go through from kindergarten all the way through college, and everything's progressive, the same group of people you've been with, you keep moving through, and you're all ready to launch, and you go out and you start running, and you find out some run faster than you, and you try and keep, sometimes you pass them, whatever that case may be. But there's this, you get caught up in kind of that herd, the scorecard of you're paying attention to what everybody else is doing. But it's at the end that I think that because what you mentioned, about your folks, about the $65,000. I mean, we really start to see the money work and how it doesn't work, and then to have the opportunity to see it actually work. I mean, I'm sure your friends are grateful. I'm grateful that you're here to talk about it, kind of evangelize just the alternative investments.
I'm so grateful. And I love to help people, do this. And I'll tell you a couple of crazy things. I don't know how much time we have left, but we're coming up on the thing, but I'll tell you a couple of crazy things. One of my very best friends in the whole world is like, well, we just don't feel comfortable. We want control. So they went and did their own thing, but they're getting permits from the city and they can't get the permits. And so it's sitting there and it's costing. I mean, it's just, you never have control. You don't have control of the stock market. You never have real control. And at least with this, I know how to mitigate those risks, right? And I'm keeping up with it. That's the thing. Another one, just can't get over the map of the world. Well, I've planned this and I've got this annuity and it's going to pay me 7% for the rest of my life. And I'm like, well, okay. And it's can't make
well, and
believe.
I think that, ultimately there are people that just never, there are the nevers. I mean, you take a look at the statistical bell-shaped curve. I remember that. And there's always the outliers. There are those that are never going to be those that the majority. But I think really this is kind of more of an early adopter, somebody that's seeking something more. It's not the herd. The herd is in the middle that's kind of doing the same thing and stuff. And but I think that everybody listening to this and everybody that's seeking this kind of information, this is what they're looking for, and just more evidence of the power of alternative investments, the power of real estate. The secrets that the 1% know that you're not taught. You mentioned
keep more. I mean, that's what it is. I'm keeping more of my money. It really is about what you keep.
In the beginning about what you're taught in school, and it's all about how this business finance, business this, business that, never about personal finance, kind of thing. And I think that's really kind of the lesson there.
Never.
Hey, Holly, before we continue, I'd like to just take a second here and shift gears. I mentioned to you earlier that by day I'm an insurance broker, and as such I work with my clients to assess risk and manage risk. And there's a couple of different strategies we employ. The first question we ask is, can we avoid the risk? The second, if we can't avoid it, we ask, can we minimize the risk? And if we're not able to minimize it, then we ask, well, how can we transfer the risk? And that's essentially what an insurance policy is. You're transferring the risk to an insurance company. And for the last year or so, I've been asking all of my guests, and I'd love to ask you kind of the question about what they see the biggest risk is. And so if you're willing, I'd love to ask you, Holly Williams, what is the biggest risk?
Oh, I know that's an easy answer, because almost I had some real estate, but the majority of my net worth was in the stock market. And I know, and it's all about hope. It really is. I mean, Trump tweets, it goes up. He tweets again, it goes down. We can have, a company can have the best earnings ever and their stock goes down. It makes no sense. And unless you're really good at picking these stocks or whatever, which, anyway, I just think that hope is not a strategy. And with every investment that I make, I can tell you exactly what we're doing to mitigate that risk. Exactly what happened in 2008 or whatever in the last recession. Exactly how fast the area is growing, how fast, what's around there, I can tell you all of that. So I just feel more comfortable, because I absolutely don't know. And the people we give our money to don't know either. This guy's about to come see me. I guarantee you, he doesn't know.
Right.
No idea.
No, I
not a clue. Just stay in and don't panic.
Right. No, I so thank you for sharing with us on your view on that. It's been a lot of fun to ask people, and I think that it's just a reminder that risk is everywhere, and you've got to take control, and you've got to have some sort of a plan, an idea, on how you're going to get there. So.
I'm a scuba diver, right? You got to have like spare air with you or something. There's got to be, I don't know, I just need a plan B. People say, you go to Tony Robbins, who I love, by the way. He's awesome, but he'll say, burn the boats, make no other way. And I can't burn the boat. I just can't burn the boat. But yeah. So I'm in the stock market still. I mean, it's not a bad thing. It's just when everything is in one thing and you're hoping that it's not going to crash, it's just not a strategy.
Yeah, plan your dive your plan. That's the old strategy there, right? So.
That's right.
Holly, yeah.
And you can get killed. You can get in a storm. You can get all kinds of things can happen, but you can mitigate that.
Holly, where can the listeners go if they'd like to learn more or connect with you?
Keepmore.com. Keepmore.com is probably the best place. Hiddeninvesting.com should be up and running here in a little while, so probably by the time this airs it will. But Keepmore.com is really the place where you can get some resources and contact me and all of that. And I'm happy to help any way I can.
Holly, I can't say thanks enough for taking the time. I've enjoyed our talk. And learned a lot, and hope we can do it again soon. All right.
We can. We will.
All right.
Take care.
And for our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.